Good morning, everybody. Uneducated Economist here. So let me ask you guys something. When did bad economic news become good for markets? Right? Because bad economic news comes out and everybody's convinced that the Federal Reserve is going to drop interest rates. And so they're going to front run the Fed by buying up these bonds. Because when the interest rates drop, they're going to sell those bonds for a premium. And so as they go in and start buying these bonds, the 10-year Treasury starts to drop. Mortgage rates start to drop. Markets go up. Bad economic news was good for markets. Think about it. What if good economic news came out? The Federal Reserve was like, hey, things are rocking and rolling. It's going really well. We're going to hold interest rates right where they're at. In fact, we might even kick up the balance sheet, unwinding a little bit more. What would happen to the markets? All right? Bonds would start selling off because they're like, oh, we can't sell these bonds for a premium. When the interest rates drop, bonds would sell off. Mortgage rates would go up. All right? Markets would sell off. Good economic news would be bad for markets. Bad economic news is good for markets. And it just, it just leads me to, I guess I'm the only one who sees it this way, but I think about that Ben Bernanke speech from 2001, where he said that they knew that they were going to run into the lower bound of zero. And once they ran into zero as far as interest rates go, that dropping of interest rates would no longer be stimulated to the economy. But he said that's okay because they had other tools that they could use. And one of these tools was something called credible threats. And if you're not familiar with credible threats, I talked about credible threats in the past, but credible threats was described in this speech as a guy who has a gold machine. And with this gold machine, he could produce as much gold at will with very little cost. Once the information got out that this guy has this machine, the price of gold on the markets would immediately drop. Even before the guy produces a single ounce of gold, the credible threat alone would be enough to move the market. So I think about this. Bad economic news is good for markets. Good economic news is bad for markets. Federal Reserve has done nothing. They've sat on their hands, unwinding $25 billion worth of treasuries every month, maintaining interest rates right where they are. But yet, every word fluctuates the markets. And I'm not so sure that bond investors, once the currency weakens, are going to be so inclined to buy bonds at such a low interest rate. At some point when the currency weakens, they're going to be like, we want compensation for purchasing these bonds. And that may end up making the Fed the buyer of only resort on those treasuries. See, a lot of people say, like in other countries, they drop interest rates down to zero, even go negative. But there's a place to run to. You could run to the United States, the safe haven asset. See, you can borrow cheap Japanese yen and go and loan it to the United States for a higher interest rate and pay back the cheap Japanese yen with the interest rate that you're getting from the treasury, from the bonds out of the United States. All right, it's called a carry trade. But if the United States drops interest rates down below zero, where do you go? There's no place to save your money. There's no place to borrow money and go to. Everything would be overinflated as far as asset values. Houses would go to the moon. Everything that you borrow money for would just go astronomically high. Yeah. But they don't have to. They get to just use their words instead, and they can fluctuate the markets with credible threats. But you take away that 2%, if you actually drop the interest rates, there goes your credible threat. Credible threats are gone. Can't use that tool any longer. But so long as you have credible threats, as long as you have that 2%, you can say that you're going to drop interest rates whether you do or not. They may even symbolically do it just so that they can. But it's not going to have any meaningful effect on the economy. And what it will do is start feeding more into the zombie companies and the malinvestments that are out there. So, anyway, bad news is good for markets. Uneducated economists, you guys let me know.